Time to Shine Today podcast Varsity Squad. This is Scott Ferguson, and I am over the moon stoked to bring you on a legend, Steve Selengut, the retirement income coach. He's in the market, but he's not like this, do this here, do that there. He's all about really generating income over returns. And the conversation we had was something I wish I would have heard probably 25, 30 years ago when I kind of got started in my endeavors in life and business and investing and whatnot, but it's never too late. He's authored an awesome book, which I have a giveaway at the end. And the knowledge nuggets you'll walk away from will have you really hyped up and blessed and happy for your future on the financial side. So if you are looking to make money in a market safely, there's risk, but a little bit more safely with a great protocol, then please break out your notebooks. And if you know somebody that's in the same boat as you, please share it with them, or like maybe smash the like button. My sponsors and affiliates really like that. So, without further ado, here's my really good friend, Steve Selengut, the retirement income coach. Let's level up. Time to Shine Today podcast Varsity Squad. This is Scott Ferguson, and I like to not so much out the box, but we kind of become the box. And that's what I got. The new box. That's why I got my really good friend, Steve Selengut here, the retirement income coach that I built my wealth. The clients that I coach a little bit on their wealth side, I really dive deep into real estate. And off mic, Steve, we're talking about parallels and how real estate can kind of run parallel to how he does his investing, how he coaches his people as well. And this guy is a legend. He's 40-year professional investment manager. And his current adventure right now is really helping others build and creating income independence. Like I always say, live a life of options and not obligations. That to me is my definition of success. And that's something that Steve will help you do. Make sure you stay around to the end because I have an awesome giveaway, and also be able to get even coached by Steve as well. He will show you how to generate more potential spending money than they or their clients that you or your clients really need. And this is something I cannot wait to dig into because I have some questions that I've kind of earmarked for Steve here. And I can't wait to get his kind of take on them. And even if you go to his website, the market fuels the ego, the income fuels the yacht, which I thought that was pretty special to sitting there on the front page. But Steve, thank you so much for coming on. Please introduce yourself to Time to Shine Today podcast Varsity Squad. But first, what's your favorite color and why?
Blue.
Blue? Why
Blue.
do we go blue, brother?
That's the color of lakes.
There you go.
Color of my wife's eyes.
Oh, are they your eyes too?
My eyes too.
All right. I'm looking at the Atlantic Ocean. My computer screen's kind of blocking it, but that's a little hazy today. But it's usually blue. In the next couple hours, it is, man. But no, thank you so much for coming on and also dealing with the technical difficulties today. This whole changing of what Zoom's got going on, but. Yeah, so let's get to the roots, man, because I know that you've saw over 300-400 kind of accounts at a time. Did I read that right?
Yeah. Okay. I had about 150 clients. Most of them had more than one portfolio. So I'd be running their IRA, their Roth IRA, their joint account, maybe children's accounts, school funds, stuff like that. So it was a lot of work. I spent a lot of time at it, but it really does require some time.
Okay.
And I think what most people have to do is either commit to that time doing it themselves or find somebody that's actually going to spend some time on them and not just put them in a program that's the same for 1,000 other people.
Gotcha. So when did you have that Jerry Maguire moment? The reason why I say that is because you remember the movie where he kind of stepped away and he gave like personal attention to his clients. Because again, I've been through some headset phone jockeys when I was younger, meaning selling me stuff, getting me in programs, getting me in investments. But like, what was that flip to that switch that really turned you that way?
I was really, really lucky. In two ways. You might say privileged or lucky, one or the other, but I was able to start investing sooner than most at around the age of 25.
Wow.
Because my parents were fairly wealthy and had put stuff aside for their children.
Okay.
And I didn't blow it all on an Ivy League education. I went to a small wrestling school.
Really?
Gettysburg College. That's where I was going at the time. But so I had this investment portfolio. And I think I got the idea that it's a very personal thing for each individual because I was lucky when I got the first broker that I brought all these stock certificates to, and she set me up and she explained to me what they were,
Okay.
more so than I ever got in college. We looked at charts and graphs. She said, you see this IBM, you see it goes up and it goes down, it goes up and it goes down. You don't have to worry about things like that. What you have to look at is the fundamentals of IBM itself. Is it making money? Is it paying dividends? And she was really very into that type of analysis, not technical analysis.
Sure.
Technical analysis back wasn't as big back then as it
Okay.
is now. But still, she got me the idea that I was 25 years old, so I could put my portfolio like this, and it would be organized this way. It would make sense for me, but that she has 100 different clients,
Mhm.
and they're in all different age groups and backgrounds and overall wealth and so forth. And every one of them really should have the attention of an individual portfolio. I just got that from her. So
Love that.
I never thought anybody did anything different than that because everyone I always came to after that, I was running it myself and they were doing what I told them to do.
Right.
So, so we always did it personally. My first two clients were one was a dentist and the other ran a restaurant.
Okay. Yeah.
Two different stories, two different types of income coming in. So I always felt it was an individual thing. So I never bought a mutual fund for God's sakes.
Really, that's an anomaly, man. One off mic, we're gonna have to talk about wrestling, which is I grew up wrestling, and I'm actually one of the mindset coaches for Team USA. But this is amazing, and because you're an anomaly, right? And so
Yeah.
let me ask you something. Do people invest when you worked with them? Did you see really kind of learn their personality, like really do a deep dive on the person before you even placed a dollar anywhere with them? Like
Yeah,
it,
I
that
studied it pretty good, and that's what I'm doing now with the coaching too. Is I'm
right.
looking at what they
That's where I
have,
was going with it.
and but yeah, I did that, and I said someone would say, well, I mean, I had people say, look, I gotta own this stock. It's coming out. I gotta buy. I said, look at some numbers about IPOs before you decide that you want to buy this particular one that you heard about from a buddy down the street. 90% of IPOs never make it even onto the New York Stock Exchange, pretty much. They just never get off the ground. They fail. They don't make any money for years and years and years, or they just go out of business. So it's a total speculation, and you're starting out in your portfolio development. What you want is you want to start safer. When you're wealthy, you can put some of your money in speculations. You can do what you want to do, but right now you're trying to build up some money so you can pay for your kids' education and stuff like that. So you need income in there. You need income. And I told him I never buy anything for anybody unless it pays income, not even a stock.
Wow.
So no, I wouldn't own that Microsoft when it came out or something
Right.
like that. But
He-
but but that's the way it was. So it was a totally different mindset. My mindset has always been on income, and I got that. I got that from my real estate developer father,
right.
who had a vertical integration. What that is, you own everything associated with what you're doing. He
Right.
had a lumber yard. He had an insurance company. He took back the mortgages. He had it all, the whole
Yeah.
thing. And he told me, he said, I have all these other things going on because when I can't sell property or I can't sell houses because of the economy, I
Yeah.
still got the income coming
Yeah.
in and I
Yeah.
can still take my family out to dinner or
Yeah.
go on vacations,
Right.
stuff like that.
So
So
I got to
that got
go to you.
ingrained. Go ahead.
I got
I'm
to go to you with the income. Like if again, you're speaking another language for me, okay? Which I understand what your father did. It's like me. I have properties. I sell real estate. I coach. So I diversify kind of all under an umbrella. But like no matter what, people have got to rent my houses. So I will always have income coming in, right? But if it's not income in stocks, what would it be then?
Well, there's two types.
Yeah, please, please.
You know, most people go into stock market to for what they call returns. What everybody talks about is returns. And what that means to them is the amount the price has gone up and how their market value has grown.
Right.
And so I think we spoke earlier about the headline on my book.
Yeah. Yeah.
Market value fuels the ego,
Yeah.
income fuels the yacht.
Yeah.
Most people are chasing these market values and chasing these market values, but they don't even think about it's not generating any income that
Right.
they can take that European trip with. They have to sell something to do it. They don't want to
Right.
do that because they don't want to pay the taxes, because
Sure.
all that stuff. So yeah, income has always been my focus, even in the stock market. I never bought a stock that didn't pay a dividend.
Even when
I,
people were younger.
even when they're younger,
Okay.
even when they're younger,
Gotcha.
I
So you,
always set it up that at least 40% of their portfolio was invested in income purpose securities, meaning bonds. And back in the day, I used to do called bond unit trusts.
sure.
And Ginnie Mae's used to use back then,
Right.
because I hadn't discovered closed end funds yet,
Right.
which pay a lot more
Okay.
than they do. And in the stock market, there was always your blue chip companies. I mean, you couldn't be on the New York Stock Exchange. I mean, you couldn't be in the Dow Jones Industrial Average if you didn't pay a dividend
Right.
at one time. I think
Okay.
they may have a few that don't pay it now, but I'm not sure, because they've well, at that time they never had a Nasdaq company either.
Right.
It was all New York Stock Exchange. So, I've always been an income guy. It shows just the company. You If you own stock in a company, you own part of that company. You're an
Right.
owner.
Right.
Theoretically, that CEO that's making the 3 million a year, he works for you.
Right.
Well,
Yes.
then don't you think he ought to pay you a dividend for your investment? Give you
Right.
something back, not just the change of your
Which would
price
be
of your.
income, right? Not a return. Like a dividend would
That
be
would be
income.
income. Yeah,
Got it.
returns are a combination of everything that goes into making the market value get bigger.
Okay.
So I don't look at market value. I look at what I call working capital, which is the
Okay.
amount I've invested. And I look at income is what it produces. If your portfolio goes from $1 million to 1.5 million, it doesn't pay any more dividend than it doesn't pay any more money than it was when it was a million,
Right.
unless you did one of two things. You reinvested any dividends that came in, or you took your profits from the gains, and then you had more capital invested. Just like you have to get more properties to generate more income.
Sure. Gotcha.
Okay. Because you
So
can't just raise the rents forever.
right.
Eventually, nobody will want to, so nobody's going to live there.
Unless you're in Palm Beach, I'll tell you
Okay, yeah, pretty much. I
that.
guess it's true almost anywhere today in the current in the current, but you get the idea.
Yeah, man. No, this
Um,
is like dumbed it down for me. So
but
thank you.
most people most people are in a market value trap. All the
Okay.
income, all the information they get is on their total return. All the information they get is that your market value has gained this and that. I mean, when you look at your when you look at your portfolio online, they make a they have columns set up for just how your stocks are doing today.
Right.
Your stock's up this much today. Wow. And just focus on the short-term
Yeah.
growth of the market value instead of the long-term growth of the income.
Gotcha. So
I
when someone came in to meet with you the first time, maybe in a discovery situation, make sure you're the right horse for the course, right? The right person to handle their portfolio. Was there anything that you use, a process that you use to really help them find that initial blind spot to get them on board with the direction you wanted to take them?
Oh yeah. I showed them my portfolio.
Okay. Gotcha.
Okay. I
Okay.
showed them my portfolio. Like if I were to show you my portfolio right now, any of my three portfolios, you'd see that it's generating almost 10% income
Okay.
on market value. It's about
Dude,
8.6
that's a
on work
freaking
8.6
amazing.
on
Yeah.
working capital. But the generation of income, the distributions, the dividends that you're getting, that's only one stream of income
Gotcha.
that you have when you're in the markets. Not so much the real estate market, because it's not quite as liquid
Right. Right.
as the stock market. I mean, I
Right.
can take my one of my closed-end funds, and anytime I want to, I can sell the sucker, right?
Mm,
So you have two streams of income to look at when you're investing in securities. You have the distribution income that they pay you monthly, quarterly, whatever. Then you have the profits you can take.
got it. Are
And the
they both
profits,
taxable?
They can be or
Okay.
cannot be. If they're in a Roth, neither of them are taxable. If
Got
they're
it.
an IRA, they're not taxable immediately. They're taxable when you get to be my age and you've taken them out in an RMD. If they're in your personal account, yes, they are taxable.
Got you. Okay.
Capital gains, long-term capital gains are less taxed than short-term,
Okay.
but that means you have to think that you have to wait for a year to get that tax benefit, which profits tend to disappear
Got you.
unless you
You
take them.
you moved into the coaching arena with this. Are you actually coaching them to do what you did? Or and if they don't want to do it, you take on their portfolio? Are you done with that now? Or like I'm just trying to get
No,
a
I
feel for people I send.
I sold
Really?
my business last year,
Got it.
last
Okay.
May.
Okay.
We had this big operator that sort of made us an offer that we couldn't
Couldn't refuse. A
refuse.
little Godfather moment. Love
A
it.
little Godfather moment
Yeah.
where it turned out to be 6 years gross income in advance. And
Wow.
at my age, give me
Yeah.
a break.
How old are
So
you, Steve? You said age a couple times, man. How old
uh,
are you?
I am in my 80th year.
Brother, you look freaking
So I'll
amazing.
so
Amazing.
I'll
Sorry,
be
man.
there.
Yeah.
Hopefully I'm gonna get the that was me
Okay.
knocking on wood there. I guess I could do this.
I think I know the answer to this question, but I'm gonna ask you anyways because you already answered it before. But okay, if someone's gonna work with a market manager, with someone that's gonna manage their money,
Yeah.
okay, is there any good question they should ask them that people usually never do ask?
Oh wow, I've got a list. I wrote an article
Okay.
recently called How to Vet of Your Financial Advisor.
Is that online on a
It's on
blog?
it's actually it's on LinkedIn. Yeah, I think if you
Okay.
just looked up that title, you might have it.
Gotcha.
But one of the things is even though people do have to get started, they don't have to get started with your money. You don't want somebody that's just starting out in the field.
Yeah.
You don't, if you start hearing the words we think instead of I think this is good for you or we think this is good for you, yeah, exactly. But look at it, tell him you want to see his portfolio.
Thank you. That was exactly you said. Remember, I said
Tell
it
him,
earlier. You've already
hey,
said it.
look at
Yeah.
my portfolio. You'll see there's not one issue in my portfolio that has more than 2% of the total in
Okay.
it. Everyone pays a distribution,
Right.
average of around right now around 9-10% it's paying. There's nothing there. There's no unrealized profit
Okay.
of more than 2 or 3%
Yeah.
today out
Love
of
it.
250 positions. I've got it's for my age. Theoretically, I shouldn't be a lot in the stock market, and you'll
Mhm.
find less than 30% in the stock market.
Okay.
You'll find some in tax-free municipal bonds as
Okay.
well as all other kinds of, and you'll find a representation in every possible sector of investing that you
Gotcha.
can think of, except maybe you won't find any raw commodities, that type of thing. You're not going to find any gold bricks.
Not
You're
going into
gonna,
the
you're,
Chicago. That's where I actually
you
did an
know,
internship at the Board of Trade. It was a
oh,
lot of
did you?
fun, but there's no way I'd risk what those guys risk every day.
Oh,
You know
yeah,
what
it's
I'm
crazy.
saying?
So,
It
so
was
it's not,
nuts.
it's a low risk environment
Right.
that generates an obscene amount of income, more than
That's
even
excellent.
my wife, who is an expert, and
Right.
she has brought us single-handedly, she and her friends, out of recessions in the past.
That's
She
awesome.
is an excellent shopper.
What does your better half do?
She was a legal secretary
Oh,
at sometimes actually a paralegal. She
paralegal?
went
Got it.
beyond the legal secretary, and
Okay.
she was my compliance officer
No shit.
for 38 years.
Love that.
So she has her desk right back
Is that her
behind
back
me,
there?
and she's got a long whip. From there she could whip me if she
There
thought
you
I was
go.
saying something inappropriate. Oh yeah,
My
yeah,
guy, man. That's a good woman
yeah,
right there. I love that. I
yeah.
love that.
Yeah.
So, what makes now that you moved into the coaching arena more, because put it this way, I'm still a real estate broker, still do $1 million homes, blah, 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 blah. But my coach that I've had since 1999,
Uh-huh.
my life coach, productivity business coach, 14 years ago, she's like, Fergie, you need to become a coach. And I was like, what are you talking about? I'm like, you're my coach. She's like, yeah, but you're at the age now. I was turned 40. 52 now, but I had turned 40, and she's like, it's about time for you to start paying it forward, right? And I have all, as a real estate broker, not only are you doing real estate, but you're also doing your marriage counselor. You're everything under the sun, right? And it
Right.
worked out for coaching. I learned in putting that through. So, I mean, for what you did, you saw personalities, money's attached to everything, whatnot. What do you feel then makes a great coach? Period. I mean, coaching anything, not just money. What do you think makes a great
I
coach?
I think you got to tell somebody, you got to be able to tell somebody where you think they might be going in the wrong direction. You've got to, I mean, the first thing I do as part of the first coaching is what I call the QDI plus PT. Those are the four basic risk minimization techniques that I describe in depth in the book.
Okay.
The
Gotcha.
quality of the securities inside, the
Gotcha.
diversification, how much is in each one as a percentage of the overall,
Right.
the income being generated
Okay.
by them, and have they been taking their profits? You can tell when they haven't been taking their profits when you see they've got this stock left over from their last employer,
Hmm.
where and it makes up 40% of their portfolio,
Right.
and it's got like 250,000 of unrealized capital gains, and it doesn't pay a dividend.
Right. Got
So they're how I'm not making enough money. Well, you got 40% of your portfolio earning zero. You know, what do you expect? And then, of course, since they're now old and this is all they've got, it's all long-term capital gains, and they've got to somehow put up with the idea I've got to pay taxes on
Yeah,
this
I
when
got to
I
pay
sell it.
taxes on that.
It's either that, or you're going to have to sell it and spend it to take the vacation,
Right.
or you're going to have to eliminate it as an investment and grow the income so you don't ever have to sell anything again to
Right.
take a vacation.
Got you. Yeah, it's like the a coach is kind of someone that tells you what you don't want to hear, who has seen what you don't want to see, so you can be who you've always wanted to be. That's how I am with coach. I'm not the easiest. I get fired a lot by
But
clients.
but
Um,
sometimes somebody will show up, and particularly when you have a book out there that pretty much says
yeah.
everything you're going to say,
Right,
and
right.
they'll show up with a portfolio
Hmm.
where you check it off. Well, you got an A in quality, you got an A in diversification, you got a B plus in income. You only got three positions that don't pay it, that pay less than 5%,
Right.
and you've been taking your profits. That's satisfying, man.
Right.
When they've read your book, they're doing a coaching session to,
Yeah,
and you can pat them on your back and say, pat them on the back and say, you're doing good. You're
that's
doing
awesome.
good.
So no,
I don't have to see you again
right.
unless you want to talk to me.
Love it.
That's that's when you've hit a home run.
I love it. That's my goal as a coach is to get fired over time. Was just to kind of let
Yeah.
you go and be
Yeah.
there for them when they need it. Yeah. So with the coaching, how do you like bring on clients, or like if I'm out at a networking event, press and flesh or something like that, like what would I be hearing to be a great introduction to Steve Selengut?
Ooh, somebody, somebody you got in a conversation and maybe you said something about the market or somebody said something back in the market. If one of those people has read my book, they just might mention it.
Right. Okay.
And then you'd hear about it. Otherwise, I don't have a course or yet I don't have a course or
Yeah.
anything like that.
I'm
I
sure
do,
you
but I'm
have to
thinking,
put one out with your experience. Hope you do.
but
Yeah.
yeah, but it's so much
It
time.
is time,
I'm
dude.
trying to find, if somebody can find the time to get it started, take, take half of the money,
Right.
but you organize, I show up,
Okay. I like that.
that's fine.
Do you do speaking
But
engagements, Steve?
I did years and years ago, but
Okay.
I'm not going to travel and do
No, no,
that.
I feel you. Yeah.
I like this type of speaking. I can do
Yeah.
this all day. I do some Q&As for my Facebook group people, stuff like that. But
Nice.
I haven't spoken to any real audiences or anything.
Okay.
I certainly wouldn't be
Opposed to it, right?
opposed to it. I mean,
Okay.
but I don't want to get in a room where they're going to ask me what's the difference between a stock and a bond.
Right. No, I feel you. Right.
I want them to have some knowledge.
Mhm.
I want to change what they think they know. I want to
Right.
modify it. I want to change their mindset. I want to show them the income that they can produce without It's interesting. And I didn't really discover. I was a stock market guy through almost through the dot-com bubble, let's say.
Okay. Were you
After
up
that,
north in the East Coast at that time, working
I
Wall
was
Street and stuff, or?
I was getting ready to leave, I guess,
Okay,
at that time. I
gotcha.
moved down here in 2001,
Okay, gotcha.
so it was a little bit after that.
But you did that life though in the 80s, the decade of decadence and stuff like that
I
up there.
started off commuting to New York City.
Okay, that's how I should have worded it. Okay. That's very
Yeah, I
cool,
was,
man.
and the commute in New York City is probably two things from that which got me started on this. It was the time frame after I'd received that money and I'd started to learn how to invest, right?
Yeah.
And I was commuting in New York and we went to a party. My
Hmm.
wife and I went to this party. And when we got home from the party or we were driving home from the party, she said to me, she said, there's something that you don't know how to do that you're going to have to learn how to do if you're going to get ahead in that company.
Hmm.
And I said, what would that be? She said, you got to learn how to kiss ass.
That's a tough one sometimes,
You know,
especially with a
and
wrestling background. It's tough, bro.
especially
It's
yeah,
tough.
with that
Yeah.
back or a back, yeah, or a
Yeah.
background growing up like I
Yeah.
did in
Yep.
that. And
I have right on my computer
so
screen right here. It says "Stay humble." I'm not even lying. I'll show you on
yeah,
camera when we're done. It
really.
says "Stay humble." Yeah. So I got to keep this moving a little bit. But have you seen the
Okay.
movie Back to the Future?
I did.
Okay,
Yeah.
let's get in that DeLorean with Marty McFly. Okay, let's go back to the Double Deuce, the 22-year-old Steve. What kind of knowledge nuggets might you drop on him? Not to change anything, but to maybe help him shorten a learning curve, blast through, and level up in life or business, maybe just a little bit quicker.
Party less, study more.
That's good enough, man. So, Steve, how do you want your dash remembered? That little line in between your incarnation date and your expiration date, your life date and your death date on your tombstone. Now, everyone has that dash. How does Steve want his dash remembered?
Oh boy. Creative soul.
That's awesome. That is awesome. So, how about what do you think people might misunderstand the most about you?
What would they most misunderstand about me? I guess sometimes I come on like I'm trying to sell them something,
Okay. Yeah. No, I get
you
that too,
know.
brother. I'm like, dude, I'm just trying to
Yeah,
pass on information because it
you
excites me,
know,
right? It's exciting. You're excited about something else, and they're like, "What are you selling me?"
I've never had a sales job ever.
No. Okay.
No, I've
Okay.
never like some of my friends have, but I guess you become a salesman once you think something that you can share.
Yes.
And yeah, I mean, I do.
100%.
Yeah. So
Anything keep you up at night?
I get thoughts in the middle of the night that I have to, seriously. I mean, I'll get
Yeah.
up out of bed and I'll go into my phone and I'll send a text or an email to myself of what something I should do tomorrow because I'll forget about it by the morning.
Right.
But yeah, I'll get awakened occasionally by
Okay.
some just thoughts or something that's annoying me that I didn't say
Right.
and I should have said to someone.
I get that. How
You know,
about
so
what's your definition of a life well lived?
I guess one where you've got a partner that you've been with forever and you have no regrets
Love it.
and where you've pretty much been able to do everything you said you wanted to do.
Yeah, that options, right? I love
And
it. Yeah,
yeah, and I think we've gotten there.
love that. Time to shine today podcast varsity squad. We are back, and Steve. Next time I'm in Charleston, I'm just going to come knock on your door. So be ready for it, man. Okay, and we'll
Sure.
go to lunch or something. But and we'll discuss some of these questions, maybe 15, 20 minutes each, right? But today you have five
Lightning.
seconds and you have 5 seconds to answer them, and they can all be answered that way. You ready? I
Mhm.
wouldn't look at your sheets because none of those are on there.
Okay, okay. I'm not looking
Curveball,
down.
curveball. All right, here we go, Steve. Steve, what is your best leveling up advice you've ever received?
I think I just told you that one. I'm
Yep,
not going anywhere in that company. Right.
love it. Share one of your personal habits that contributes to your success.
Workaholic. And I think it's inherited. My
Love it.
father's the same way. He worked till he was 89. I expect to do the same.
And doing what you love, man.
Yeah,
And
I
yeah,
just really enjoy what I'm doing. And
yeah, love it. Do what you love in the service of people that love what you do. If they see you loving it, they follow you. I love it. So A book. What book have you read through the years that's really like shines a light that you think back to, like, and just say, I picked up really good stuff out of that book?
Because of what I do
Yeah,
and the books I've written, I've stayed away from reading anything else in my field
sure.
because I didn't want to muddy the water.
Okay.
And I do read only when I'm on vacations,
Okay.
and I like to read mysteries like Lee Child,
Very cool.
Reacher. I have
Yeah.
read
Oh,
every one,
Reacher, love it. Love it.
and he's the guy.
Does your
And when
wife
they
like watching
what
Reacher?
not particularly,
My wife does. I'll tell you that.
oh,
She's
I
like,
bet for other reasons. But
ah.
what about when? How about the first Reacher movie? Didn't that blow your mind when they put that little wimpy guy
Tom
and
Cruise on
when
there.
Tom Cruise played Jack Reacher?
Wasn't a fan.
He could fit in a Jack Reacher thigh.
Yeah.
I mean,
Yeah.
just didn't do it for
Now
me.
they have that Alan Richmond
Now
doing it.
this new guy,
That dude's Reacher. Awesome.
yeah,
All right.
very
So, any nicknames growing up?
little gut.
Love it. Love it.
Because my brother was big gut.
Got it.
Actually.
So, do you have any hidden talents or superpowers that you have that nobody really knows about? Well, until now.
Uh, I can hit from both sides and of the
Nice.
plate baseball, and I play right-handed and putt left-handed and chip left-handed
That's awesome.
in golf.
That's awesome.
That's about it. I don't have a whole lot.
Chess, checkers, or Monopoly?
I've tried them all.
Okay. Which one?
Best at Monopoly.
Okay. Beautiful. Headline for your life.
Uh, Headline for my life. You don't people my age, you don't ask that kind of question because it gets me all teared up and worried. Headline for my life. What I say before, creative soul. That
I know it's beautiful, man. That's awesome. We'll leave it at that. Any superstitions?
None.
Me neither. Go-to ice cream flavor.
Chocolate.
All right. So there's a sandwich called the Little Gut. Build that sandwich for me. What's on that sandwich?
It's on that sandwich. Pastrami.
Okay, I'm there with you. Very cool. What else?
Pastrami, a good rich hot mustard.
Okay.
And some cheese. Not necessarily Swiss.
Maybe provolone?
Good provolone.
Yeah.
Havarti. Good sharp cheddar, maybe.
Yeah, my man. Favorite charity and or organization like to give your time or money to?
Favorite charity be going to Walmart and paying the layaways.
Dude, that's awesome. You're freaking awesome. I love this. Last question. You can elaborate on this one, but what's the best decade of music? 60s, 70s, 80s, or 90s?
Oh, 60s and 70s.
My man. I love that. Yeah, it's the time frame of storytelling, and I love telling stories.
Yeah, there were lyrics. There were actually lyrics.
Yes. Yeah, Steve, how can we find you, my friend?
Well, I have a website, the income coach,
cool one too. Yeah.
theincomecoach.net.
Yes.
And I have my book is Retirement Money Secrets.
Okay.
If you can see it,
Yep. And I'm just gonna throw it on the screen right now, squad. If you're watching Vimeo or YouTube, and I am going to do a 3-book giveaway to the first person that puts Little Gut in any of our social. I don't care if it's Facebook, I don't care if it's Pinterest, wherever. Text it to 561-440-3830. I will personally purchase and have a book mailed out to you. And I will also let Steve know that I'm mailing it to you. So maybe you can get in touch with Steve for his services. But let's talk a little bit about the book here, Steve. Like, you brought it along. Obviously, it's a brainchild of 4 or 5 decades of experience, right?
I wrote a pamphlet once called The Millionaire's Secret Investment Strategy. And I had it printed up locally, and I just pretty much gave it to my clients.
Okay.
And then I had an actual book called The Brainwashing of the American Investor, the book that Wall Street does not want you to read.
I saw that on Amazon too, didn't I?
It's up there. I got messed up with a couple publishers on that, so I give that book away on my website.
Okay. Yeah, here it is. The Brainwashing of American Investor.
And it's more like a textbook.
That's cool.
On investing from my perspective. I love it. And then Secrets, of course, sums up the income thing that you need for retirement.
Okay.
And it defines 6 principles. I mentioned 4 of them already. And then there's the market cycle nature
Right.
and how to manage that so it's always beneficial. You benefit when the market goes down, you benefit just as much, even more when it goes up,
Okay.
that type of thing. And the third principle is that mindset, changing that mindset from looking at market value to looking at growing that income every
Growing the
quarter
income. Love
and
it.
growing that capital. Yeah.
Have you ever authored anything that talks about, hey, I'm in my 50s, 60s, never did shit, excuse my language, with, I mean, I got money put away in a bank, but I never did anything, like ways that people that kind of like a start late, retire rich kind of book, kind of something like that. Have
I
you ever authored anything like that? Because I'd be interested in reading it. I'm going to
I
devour all
haven't.
your stuff.
I haven't. I think either of those books will do that for you.
Okay. Okay. So you
You
could be
know,
a little bit
oh
mature
sure, you got to
in,
start somewhere, but
okay. Okay.
if you can if you can start off with the closed-end fund approach to it at any age, you're going to get a head start. You're going to fire early. You know
Right.
what I mean?
Right.
So yeah, I think income is the important thing to change in your mindset. And with closed-end funds, like I said before, you're you can do all equity closed-end funds and you'll own every stock that everybody's excited about. Believe me,
Sure.
Nvidia is a big player in all
Yeah.
of those closed-end funds.
Right.
But those guys are going to take their profits, and I'm going to wind up with a lot of that profit in my pocket in the form of a distribution.
Got you. Okay.
And so
I love it.
I don't have to be that last guy who buys it before it starts to get down to be normal.
Right.
You know,
Right. Hey, Steve, do me one last solid, please, and leave us with one last knowledge nugget we can take with us, internalize, and take action on.
that would be to take a look at your next financial statement, not your next statement from your broker, and look at the realized income portion and see what it says. And think about how many times, let's say it was 2 or 3 times bigger, how much more you would be on the road to financial or income independence than you are now.
Okay. So it's
So that
not bigger, but if it was, where you would be then?
I would most people, and I would say 95% of the people who are listening to us right now will have less than 4% income generated by their portfolio today,
Yeah. Oh, 100%. Yeah.
unless they've already been talking to me.
Thus, they've read your book and got with you. I
Right.
love
Yeah,
it.
you got it.
I love it. And Squad, I just had a really fun conversation with a gentleman that's in his 8th decade that looks nothing like he could be close to that. But he put the reps in, Squad. He did the work and he put it in writing to share with you. And to take it to the next level, please let me make a warm introduction to my good friend Steve, who had great upbringing with parents. They really helped him out, and they really passed that down into his mindset that, one, it's okay to make money, and two, there's smart ways to do it, and he took it and ran. He wants you to stay away from the speculation route. He wants you going after incomes over returns. And just remember that you are the owner of a stock, and the CEO, whatever, they actually work for you. And so dividends are good. So start getting them. Okay. If you're going to work with a market manager, a financial advisor, ask it, see their portfolio, see what they invest in. And if you hear we over I, like we do or I do, get out, go with the I do. Let's see their proofs in the pudding. Okay. And find that. And then I also want you to go and hook up with Steve on LinkedIn, because he does have some great articles that he does put out there. He's very much going to be remembered way down the line, Steve, way down the line, as a creative soul. Okay. And find yourself a partner, he reminds us, where you can do life with, that the sun rises and sets with, like he's had with his beautiful wife. No regrets. Just let it go. And lastly, if get your statement from your broker. And if you realize that you could be making more, then let me make that introduction to my good friend Steve. He levels up his health. He levels up his wealth. He's a handsome devil, man. He's so fun to interview, so full of knowledge. I could keep this going forever and ever, man. Thank you so much, Steve, for coming on. You've earned your varsity letter here at Time to Shine today. Thank you so much for coming on.
Thank you.
You bet.
Enjoyed it. Great.
Chat soon. Bye.